Over my 7 years in trading, I've tested hundreds of strategies, and very few have impressed me the way this one has. I came across a setup that delivered over 130% profit in just 2 months. What makes it so powerful is its simplicity. It relies on only 2 free indicators available on TradingView. No fancy tools or paid add-ons, and yet it performs consistently across different markets. Stick around till the end because I'll share not just the exact rules and settings, but also a few insights from my own experience that can make this setup even stronger. Plus, I'll show you real backtest results from 100 trades that prove how well this works.
The first thing you need to do is open up TradingView. Once you're on your chart, pick any instrument. It could be crypto, forex, stocks, or indices. From my experience, this setup adapts beautifully to all of them. For today's example, I'll use Doge USD just for demonstration. The first indicator we'll add is the DEMA, Double Exponential Moving Average. Over the years, I've noticed that normal EMAs tend to lag behind price during strong moves. The DEMA, which was created back in 1994, was specifically designed to give faster signals with reduced lag. On the chart, you'll notice that the DEMA, shown in blue, reacts much quicker to price changes compared to a normal EMA in red. It gives earlier signals, which can be a big advantage for active traders. However, I always tell people that less lag doesn't automatically mean better results. Sometimes a little delay helps filter out noise. But in this particular strategy, through my backtests, the DEMA setup consistently outperformed the standard EMA. Once you've added it, set the DEMA length to 200 and make it blue for clarity.
Next, we'll add the second indicator, the supertrend. It's a favorite among many traders, and for good reason. Go to the Indicators tab, type Supertrend, and select it. Then, in its settings, set the ATR period to 12 and the ATR multiplier to 3. For my personal testing, this configuration strikes a great balance between sensitivity and reliability. Now let's talk about how the strategy actually works. In this example, we'll trade Doge USD on the 15-minute time frame. The first rule is simple. Only take long positions when the price is above the 200 DEMA. Over the years, I've realized that this single rule, staying on the right side of the moving average, filters out a lot of losing trades. It helps you align with the bigger trend. The second rule is to wait for the supertrend to give a buy signal. For instance, if the price is already above the DEMA but the supertrend hasn't yet flashed green, don't jump in. Wait for that confirmation. One lesson I've learned the hard way is to never enter before the candle closes. Sometimes a signal flips midway through the candle and traps you in a false entry. Always let the candle close before you execute the trade. Once it does, enter your position and set your stop loss at the supertrend's buy line.
The best part about this system is the exit rule. Unlike many setups where you fix a target like 1.5R or 2R, here you let profits run. You hold the trade until the supertrend flips to a sell signal. That's when you exit. This allows trades to stretch into massive profit ratios, sometimes 4R, 5R, or even more. For example, when the price was above the 200 DEMA and the supertrend gave a buy signal, entering on candle close and holding until the supertrend turned red produced a 4.1R profit. It's simple but effective. Another example, price crosses above the DEMA, the supertrend flashes green, you enter, place your stop, and exit when it turns red. Another clean profit. For short trades, it's just the opposite. Price must be below the 200 DEMA. Wait for the supertrend to flash a sell signal, enter after the candle closes, place your stop loss at the sell line, and stay in until the supertrend flips back to a buy. Over time, I've found that following these steps exactly, without improvising or second-guessing, is what separates consistent traders from emotional ones. Now, let me share some refinements based on my own observations. Sometimes the price is below the DEMA, but the supertrend gives a buy signal. In those cases, instead of skipping the trade, I wait for the price to actually cross above the DEMA before entering. This small adjustment captures more valid reversals and avoids missing strong trends. Another layer you can add is the Fibonacci Bollinger Bands. While I haven't done a full backtest with them yet, in several chart studies I noticed they improved profitability by catching extremes. To add them, go to the Indicators tab, type FBB, and add it. In the settings, uncheck everything except the boxes with ones and make the lines red. These act as dynamic high and low boundaries. If the price touches the upper red band while you're in a long trade, I personally take profits immediately, even if the super trend is still green, because from experience, price often reverses sharply from those zones. You won't see these setups often, but when they appear, they're worth paying attention to.
Now, let's talk numbers. I personally backtested this strategy on Doge USD and LTC USD over 2.5 months, taking 100 trades. The results were solid. A 60% win rate with 60 wins and 40 losses, and a total return of 130.14%. The longest winning streak was 8 trades in a row, and the longest losing streak was only 3, a very strong ratio for such a simple system. After years of testing and trading, I've learned that profitability isn't about perfection. It's about consistency, discipline, and proper risk management. This strategy hits all those marks. If you'd like to learn how to backtest setups like this yourself, I have a separate video explaining exactly how to do it, using years of TradingView data. But in my honest opinion, after 7 years of analyzing markets and building systems, this combination of the 200 DEMA and super trend remains one of the most efficient and clean technical setups any trader can master. Thanks for watching, and I'll see you in the next one.